Well, happy Monday. It's October 14th. It's Indigenous Peoples Day. It's Columbus Day, and I am still at work today. So let's look at the latest trends here in the Austin metro area. Of course, we're going to talk about interest rates to start it out. I think as a surprise, people are still a little shocked that rates are higher still than where they were when the Fed made their announcement. But what's happening is we're still getting hotter than expected inflation data. Unemployment is still low. Jobs are still being hired. So overall, good news is bad news to mortgage rates because it means the bond market wants to get a higher return if they think the economy is stronger. So I'm going to zoom down here to this chart. This is the 30-year fixed rate mortgage interest rate since the beginning of September. And this was pre-Fed announcement. It was just coming down, down, down. The Fed made their announcement on Wednesday. That date, and it was super low, 6.1%. We thought it might even go a little lower. But what's happened since then is the inflation data has come out hotter, and boom, the rates have gone up probably half a point since the Fed announcement. I don't know if this is a long-term trend, but it may be a shorter-term trend between now and when the Fed makes their next announcement, which will be in November, right after the election. So we're probably about 4 weeks out, maybe 3.5 from when they're going to make their next announcement. So we'll see. There could be more data that comes out that shows inflation is slowing down and rates could come farther down. How is that impacting mortgage applications? So this is national right here. So the composite index, sorry, that's not the one I wanted to look at. Refinance, nope. Purchase, here's the one I want to look at. So here's your interest rates, okay? And this goes all the way back to 2015. The dark area, this bell chart right here, is number of sales. And so as rates were coming down, you can just see the purchase sales were going up, up, up. We peaked out in 2021 when the market was insane, not only here, but nationally. Since rates started going up in 2022 and they peaked out in 2023, we've seen sales continue to come down. But even when we had a huge drop off in the interest rate at the end of last year, so that was, maybe November 2023 into about early February 2024, we did see a spike in sales. That lowering interest rate sharply drove out the buyers, but it was a false flag because since then rates kind of stayed up and it's really just dropped off buyer activity. So we're going to wait and see. I don't know if we're going to get any more pops this year, but with interest rates just being volatile and where they are, we're not seeing a big spike in activity. I want to talk about September data. So this is now looking at the month of September. We're in mid-October. So this is all the sales that took place last month and closed. So total sales, we were down about 8.2% over 2023 in September. Pendings were up, so that's a good sign. We want to see pendings. That means we might have a few more closed sales in October. These would have been September buyers, should be closing this month. Listings were pretty on par, within 0.5% of last year, but active listings are up 13%, even over last year, which was slow. And what that means is just sales are really building up. We're getting more sellers coming to the market than we are buyers coming to the market. Withdrawals and expireds are about equal. Depends on what segment you're looking at. We're seeing a lot of those depending on the category. Average sold price and median sold price both down a little over 5% over last year. So Austin has not yet hit the bottom. I think we're getting close, but I would expect that's probably somewhere maybe in January or February before we take a typical spring upturn. And I'll show that to you on a chart here in a second. Average sold price is down about 6% over this time last year. Days on market, we're at 80 days on market on average. That is the highest we've had in over a decade. So it is just a slower to get a contract market than we have had in the last 10 years. Months of inventory, we're up about a month over this time last year. Again, price is declining. We looked at that. Total sales are down and price is down. Here's that in a chart for you. So if you were looking at the median sold price, this is going back to last fall, September. You can see prices typically soften in the fall because we have fewer buyers. The market just tends to slow down. All the buyers come out at the beginning of the year. And buyers buy before sellers sell. I've said this before, but if you don't know what that means, I want you to picture two bell curves. One is for the buyers and one is for the sellers. The first bell curve is the buyers. They're going to get pre-approved. It's a new year. I want a house. They're going to jump out the door, get pre-approved with their lenders, and they're going to start shopping in January, February, and March. But the sellers for that year are not quite ready yet. They're going to think about listing their home around March or April or May. And so what happens is there's not enough inventory sometimes at the beginning of the year. So that starts kind of that upswing in price. Maybe they have to bid on some properties or the volume goes up with buying activity. But the sellers do come to market. So that's the second bell curve. And they start really picking up on listings as we get into March, April, and May. And what happens is the buyers start to taper off as we get to about June. If you wanted a house for the summer, you needed to have written an offer in April, May, close in June. Whereas if you're buying in July, you're not going to have a house till August or September. So what happens is the buyers start to peak out May or June in terms of volume, but the sellers are just really hitting their stride. They're kind of listing for the summer. So what happens is there's more inventory later in the summer because the buyers start dropping off. And so what happens with price when those two bell curves happen is you typically have more buyer activity in the spring. Prices, the median price for the market tends to go up. It doesn't mean an individual home price goes up, although there is a lot of correlation there. But it does mean that the activity kind of peaks out in May. Sometimes it's April, sometimes it's June or July, but typically it's going to be in that second quarter. And then we see just kind of a gradual decline in listings and in buyer activity as we move into the fall and the winter. So that's what we're looking at, median home price and average and median peak out in 2024 this year. One more chart. This is pendings. I like this one because this is telling you buyer activity. And this is last year buyer activity. And we had pretty good spring. We had a nice pop in buyer activity. You can look at this year, which is the lighter gray line. We had a pretty decent pop in activity. But when interest rates in April jumped up to 7.5% this year, look what happened to buyer pendings. Boom, they just fell off the map. They went all the way down to like a fall level, and they haven't really recovered this year. And that's really what's helped build up the inventory is you have lack of buyer activity. Last year, you had your typical bell curve taper off. This year, boom, we had a big drop off in buyer activity. And even though rates have come down, it hasn't really increased the activity. We've got finally a little bit over last year now that we're into September, but it's way below where we would have been had the market held together. This is number of active versus sold listings. This is current activity. So the green are the active single family homes on the market, and the blue is sold data. So obviously in October, too early, we'll see that go up. But if we look at where we peaked on sales, it was May of this year in terms of number of sales, and that's trickled down. We finished September around just under 2,300 single family home sales, but we still had 13,000 single family homes on the market. So, we're seeing maybe 15, 20% of those get a contract in a given month right now. That means 80% of sellers are going to go to the next month and try and find a buyer. The only thing helping sellers right now at all is the fact that some sellers are coming out of the market. There's not as many new listings that come to market this time of year. So the inventory should shrink a little bit, but we're also feeling kind of buyer activity shrink down too. But that's active versus sold listings right there. This has to do with price. This is original price versus sold price. I pulled this chart all the way back to June of last year. And again, imagine that's kind of the peak of 2023. These are list prices, the green, and sold prices is the blue. And again, here's last fall. Interest rates were going up to 8%. It really dropped off sales. And we bottomed out in sales between October and January. Again, pretty typical. Then we saw this spring list prices as a market go back up. But buyers didn't follow them. There was a big gap by the time we got to the summer between the market list price and the market sold price. This is not per house, but again, it's market. You had a bigger gap. And then, of course, we've seen the list prices coming down this fall because of buyer activity not being there. And we're slowly seeing the median home price come down with it. None of this is unusual. This is seasonal. This is normal. It feels a little more acute because we have higher interest rates and probably more supply and less demand than we've had in about a decade. But the seasonality of it all is very normal. This is typical for what we would see in a market. We just have higher inventory than we've had in a while, so it adds a little extra pressure to it. If you are a seller right now, obviously we're in the fourth quarter. I think the number one weapon we have is having an aggressive price if we want to drive buyer activity into that property. We're doing what we can with open houses, with marketing, but really buyers search by price, and the few buyers that we have out there are looking for deals right now. If you are a buyer, I think it's important you're connecting with your lender right now because mortgage rates are so volatile. We want to make sure you understand your buying power just in case they pop up a little bit more, or if they come down, where that's going to help you in terms of buying. And of course, yes, inventory does typically start to come down this time of year. So don't expect you're going to get a lot of new listings every week coming to market. But I think you have opportunities with the ones that are in the market between now and, let's say, January, before that market may turn that corner again. Anyways, I hope this is helpful. If you're looking to buy, sell, or invest in Austin, of course, we'd love the opportunity to chat with you. And hey, if you want to follow these videos each and every week, make sure to go to our YouTube channel at Ryan Kelly Group. Click that subscribe button and you can follow our videos there. Hey, this is a big week here in Austin. We have Formula One race this weekend. We have Texas playing Georgia, a top 5 matchup in college football. The weather is amazing, and I think we're finally going to get a cold front. So we're going to drop down into the 70s, and we have not had rain in 2 months. All these listings have crispy yards, and so we're begging for some rain too. So hopefully you can help us out there. Hope you enjoy this video, and make sure to catch us next Monday. Thanks.